This is Andrew Stotz of A. Stotz Investment Research to talk about world-class benchmarking for Korea Electric Power Corporation, or what I'll call KEPCO. The first thing about this company is let's understand the background. Korea Electric Power Corporation is the country's, that is Korea's, largest electricity supplier and, via its subsidiaries, has a monopoly in Korea on nuclear power. It has 32 projects in 17 countries, but 93% of the group's revenue and profits are derived domestically. The Korean government owns 51% and mandates pricing in line with underlying fuel costs. We can look at this company, we can see that the market capitalization is about $33 billion with about $47 million in average daily turnover, with a free float of about 42%. Let's look at some of what's going on at the company. First of all, KEPCO generates, transmits, and distributes electric power, and via its 5 regional power subsidiaries and singular nuclear power subsidiary, it enjoys a near monopoly on power production in Korea. In 2014, the company had total installed capacity of 72,000 megawatts and supplied 477,000 gigawatts, or more than 90% of Korea's total electricity demand. It owns 84% of Korea's power generation facilities, and the government mandates that pricing follow negotiations between the government and KEPCO. However, while fuel costs have fallen dramatically over the past year, tariff cuts are being negotiated with a time lag. Now, sharp price swings to consumers and industrial users are generally avoided to lessen volatility and allow KEPCO the reserves to maintain capital expenditure for more efficient power generation facilities. KEPCO's main fuel inputs are coal, liquid natural gas or LNG, oil, and nuclear power. Now let's look at the breakdown of revenue as we know it by customer. First is industrial, which is 56%, then commercial, 22%, residential, 14%, so mainly supplying the industries of Korea. And if we look at this, we can see that 51% of the inputs are coal and 33% LNG, and nuclear is 8%. So now let's look at our world-class benchmarking for KEPCO. First thing we can see is that the company's ranking on profitable growth is number 1. Fantastic. That's benchmarked against 310 large utilities companies worldwide. Now, where does this come from? Well, the company's profitability and growth ranking both are maintained at number 1. Impressive. This means KEPCO ranks among the best 31 large utility companies in the world on both measures. And what we can see is profit margin has been the driver of KEPCO's ROA. It's gone from the worst in 2012 at 10 to the best at number 1 in the prior 12 months. Margin change has also been a main driver of the improved growth rank. We can see the company is ranked number 1 in margin change, meaning it's improving its margins. So there you go on KEPCO. Do you want to see the profitable growth ranking for a company in your portfolio? Well, just leave a comment below with the company name and country of listing, and I'll post it if I have it.